Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Let's check out a couple of more aggressive growth stock picks, shall we? With Bill Wilton, our aggressive growth stock analyst at Zacks.com. Lancaster Colony is what you've written about most recently. LANC, the ticker symbol. Mm-hmm. They make a variety of products.
They do.
Tells me a lot.
They're best known for their foods. They do salad dressings, dips, things like that. But they also have some houseware business, bowls, vases, that kind of thing. Okay. And then the oddball is they're in the tire industry.
I saw that, yeah.
But they are actually transitioning out of those last two areas, focusing on the specialty foods. So they're trimming up business, and things are going very well for them right now. They just reported their fiscal year-end results a couple weeks ago. Mm-hmm. Earnings per share for that quarter came in at $1.01. That beat the Zacks consensus estimate by about a quarter. Sales for the year were up 7% to just over $1 billion, and the estimates are rising following that final annual report. And they're projected to grow 11% in fiscal 2010 and another 7% in fiscal 2011. So for the next 4 quarters, they're looking at 11% growth. Mm-hmm. They're also a decent value. One share is going to cost you about 15 times forward earnings, and they are trading at just under their 52-week high. As you can see, their intraday range is just barely under that 52-week range. What happened is after that final year-end report, you can see that they got a nice surge on some strong volume. Since then, they've tapered off after they set that new 52-week high. Not too surprising as the market's kind of taking a breather right now. So, it'll be interesting to see what happens here if they can maintain this level. If we do take a downturn, there may be some profit taking, which we've seen a lot over the past few months. If not, they should go on to bigger and better prices.
All right. You've also written about Wright Express recently, WXS, the ticker symbol. They are in the payment processing and information management services business.
Yeah, and what they do is they specialize in both government and corporate fleets. So if you've got a fleet of trucks or cars that you need to, obviously the company is paying for all the gas and fuel, and they need to keep track of all the information that's going on there. So they process and manage all that area of the fleet business. They also just started not too long ago an agreement with MasterCard, and that business is flourishing. Their volume through that unit is up 24% in the past quarter, which they reported on July 29th. Estimates have risen sharply after the 17-cent surprise that you can see here. Earnings per share came in at 57 cents. They've got a debt-to-equity ratio that's under 0.5. So they're very conservative, not too leveraged, and they're still a solid value. You can see here their PE is about the same as Lancaster. You're looking at about 15 times forward earnings. But their growth ratio is also at a solid value as well, just a bit over 1.0, which is about the benchmark for a decently priced growth rate. Here's the chart. One of the things I really like about this company is this is one of my favorite formations. When you're setting higher highs and higher lows, it's a very bullish trend. Once you start to set a lower low than you had previously, it gives way to a lot of selling and a little bit more angst amongst people who are looking to take profits. So as long as they continue to set higher highs and higher lows, I look for this general trend to continue.
All right. Do you own either of these two?
I do not.
If you want to check out the most recent aggressive growth stock that Bill has picked for your consideration, you can do that by going to Zacks.com's homepage and looking over into the upper right-hand corner next to the aggressive growth category. That live link will take you to his most recent story stock. With Bill Wilton, I'm Terry Ruffalo.